Hey everyone, welcome back. June kicked off another wave of geopolitical and market drama, from Israel's strike on Iran, which sent oil prices soaring and stocks tumbling, to the tragic Air India crash that rattled Boeing's holdings. It's been anything but calm. I'm still confident in Boeing long term, but it's another reminder of why diversification and steady conviction matter. And despite the turbulence, I've actually been buying a lot this month, adding new names across several sectors. I'm staying focused on the same goal: find growth stocks at value and keep building positions that make sense for the long haul. So what I'm buying: Aston Martin Lagonda. Not just hyped hypercars, the new Le Mans Valkyrie and F1 tech deals with Honda and Newey show serious engineering momentum. I think the brand reboot has legs and I'm buying in. Celanese, a strong cyclical that gives me broad exposure to industrial chemicals and acts as a leveraged play on a global recovery. Hedge funds have been building positions, and I think the recent pullback creates a solid long-term entry point. Capita is preparing to roll out Salesforce's AI-powered Agentforce platform later this summer, aimed at cutting recruitment costs and improving efficiency. With the government as a key client and cost pressure across the public sector, I think this tech investment is the right move at the right time. Skyworks Solutions. The stock has been knocked back to the low $70, but US policy is now pushing semiconductor reshoring. The CHIPS Act has been rebranded and actually expanded under Trump, and Skyworks should benefit. Strong insider buying also supports this thesis. Travis Perkins. Despite recent earnings headwinds, the UK government's Construction 2025 plan and new planning reforms are aimed at boosting home building. I bought in at near 15-year lows, betting on a rebound in domestic building activity. Diageo. I've been layering into Diageo consistently. Shares are 15 to 20% below peak, despite consistent cash flows and global brand strength. This remains a cornerstone for steady returns. Riskified. E-commerce fraud tools are still in demand, and the Q1 results exceeded estimates. With AI concerns priced in, this one's shaping up for a good rebound, in my opinion. Airlican. Industrial tech stability in an uncertain world. Airlican bounced off technical support, and I see potential in its advanced materials coating services. Johnson Matthey. They just sold their catalysts unit for £1.8 billion to Honeywell, sharpening their focus on clean air and battery tech. This capital raise and strategic shift are great signs of a leaner, more focused business. Jupiter Fund Management. Still trading below net asset value, but fund flows are picking up again. Asset managers often go out of fashion and come back into favor, so I'm adding here. Ionis Pharmaceuticals. The stock broke resistance after Trump fast-tracked approvals, and their chart now looks more stable, a good setup for the next biotech leg up. Whitbread. They've continued share buybacks and are benefiting from rising travel demand across the UK and Germany. Cost-saving initiatives are paying off, and I like the long-term strength, especially of Premier Inn's brand. Glencore. They've recently repurchased over 3 million shares and are focused on copper and battery metal production. Exactly what the energy transition demands. With commodity prices supported by tight supply, I think there's a lot more room to run. Novo Nordisk. Still showing incredible momentum behind GLP-1s like Ozempic and Wegovy, and recent results show strong growth across both diabetes and obesity segments. Shares pulled back slightly on valuation concerns, and I'm buying here for long-term compounding. I'm also buying Greggs, a solid UK brand with strong margins and big expansion plans. They're pushing ahead with more drive-through locations and continue to report resilient demand. I like the long-term cash flow profile, and this feels like a good entry point. I'm considering selling just a couple of stocks this month. Firstly, Philips. I sold my position after continued legal uncertainty around their sleep apnea devices. Despite recent settlement, it still feels like a drag on sentiment, and turnaround has been slower than I expected. I'm considering selling Xiaomi as well. Some of the gains have been amazing after the sharp run up. I'm currently sitting at gains of 325%, so I'd be happy to lock in a little bit of profit if I notice that it's just starting to pull back some more. So that's it for June. I've added luxury, industrials, semis, clean tech, biotech, consumer staples, and UK cyclicals, all on the back of tangible catalysts like insider buying, policy support, AI rollouts, and share buybacks, and also chart-driven entries. Valuations are compelling, and I'm building positions gradually to manage the risks. So that's it for June. Thanks for tuning in. If you're watching anything specific, just drop a comment. Otherwise, stay agile and let's see what opportunities emerge in the next month. Cheers.